So currently the private sector invests just over $60 billion a year in infrastructure in developing Asia. Now, we estimate in that report that this number will have to triple or quadruple to about $200 to $250 billion a year if Asia is to meet its infrastructure needs over the next 15 years. Now, that may seem pretty daunting, but we believe there's large potential for increasing private participation. And the reason for this is that infrastructure is fundamentally an attractive asset. It offers good returns, low correlations with other assets, and stable and predictable long-term cash flows. And there's a very big pool, about $50 trillion in global capital from pensions, insurance companies, and sovereign wealth funds that is looking for these types of investments. So it's not finance that's fundamentally the problem here. There's money that's there for the taking. The issue is more the limited supply of bankable projects in the region. And to address this, the region's governments will need to make progress on three fronts. The first is that they need to get better at planning, designing, and doing due diligence on infrastructure projects so that private investors know that, that these are good investments. The second is that the regulatory and institutional framework needs to be more conducive to private investment. And the third is that the region needs to deepen its capital markets. Now, fortunately, many of the countries in the region are making progress on these fronts, and that should increase private participation in infrastructure going forward.